Hi everyone, today we'll be reviewing 4 cloud stocks, namely Salesforce, Workday, Fluent, and Cloudera. Salesforce is a provider of enterprise software which is delivered through cloud with a focus on customer relationship management. The company focuses on cloud, mobile, social, Internet of Things, and artificial intelligence technologies. Salesforce has a forward PE of 57.5, which when you compare it against the industry average of 21.7, it means the company is at the moment highly valued. Having said that, if you look at the company's past 6 reporting periods, Salesforce has been able to report 6 positive earnings surprises, and at the moment the 1-year target price for Salesforce stands at 181.63. That means Salesforce, ticker symbol CRM, has a price growth potential of 13%. On the other hand, Workday is a provider of enterprise cloud applications for finance and human resources. The company delivers financial management, human capital management, and analytics applications designed for various companies, educational institutions, and government agencies. Now, if you look at Workday and compare it with Salesforce, Workday has also been capable of reporting 6 positive EPS surprises. So the company has had target price for 1 year of 199.91, and when you compare that against the company's current stock price, that will mean it has only 2% price growth potential. Not really as good as CRM or Salesforce. Now, looking at Fluent, which is a data-driven performance marketing company, the company basically operates through 2 segments, namely information services and performance marketing. Fluent, ticker symbol FLNT, has a 1-year target price of 6.75. That means, based on its current stock price, it has 8% potential to grow. Fluent has had only 2 positive earnings surprises in its past 6 reporting periods, and its last reporting period recorded a 63% negative surprise. That caused the stock price to drop massively after the reporting period. Having said that, the company's stock price has been growing ever since, and its current price is actually beyond the level it was right after the reporting was announced. Last but not least, Cloudera, ticker symbol CLDR, one of my favorite companies. It's a developer of platform for data management, machine learning, and advanced analytics. Cloudera allows enterprises to operate, manage, and move workloads across multiple architectures, mixing on-premises and cloud environments. So, as you can see, Cloudera has a 1-year target price of 18.24, which compared to its current stock price of 11.55, it has huge potential for growth. Currently, it has a 58% price growth potential, which is massive for this company. In terms of the reporting periods and earnings surprises, 5 out of the 6 past reporting has had positive earnings surprises. Nonetheless, because its only negative earnings surprise in the past 6 periods was the latest one, the company's stock price dropped massively. It had a 25% drop in its value, and probably that might have given many investors a good opportunity to buy the stock. So if you look at the 1-year price growth potential, we'll see that Cloudera is in a better shape in comparison with the other 3 companies, as it has more than 25% growth potential in terms of its 1-year price. target. One thing we have to remember though is that among the 4 companies, Cloudera is the only one which at the moment is loss-making. The other 3 companies are profitable. So for Cloudera, according to Zacks estimate, the company will turn profitable next year. In terms of the long-term growth estimate, according to Zacks, Fluent seems to be in a better shape compared to the 4 companies examined here, with 40% growth estimate. Cloudera seems to have the worst long-term growth estimate at only 15%. These figures are also similarly reported by Thomson Reuters. Fluent still has the 40% growth rate, whereas the long-term growth estimate for Cloudera, according to Thomson Reuters, is 21.1%. Still, the ranking is exactly similar to Zacks. Now, if you look at the average ratings of these 4 companies across a number of segments and categories, such as earnings, fundamentals, relative valuation, risk, price momentum, and insider trading, we'll see that while Salesforce is very good at the moment in terms of its earning and also risk, it doesn't really have a good prospect due to its insider trading, which has a negative rating, and it's also a negative rating in terms of the relative valuation. We'll see that Workday has also a very high rating for earnings, but a very low rating for relative valuation and insider trading. So the relatively low score for valuation is due to the high prices of the Workday and Salesforce, which we discussed earlier. They don't necessarily have much room to grow, at least in the short term, given the high stock prices. For Fluent, we'll see that the highest positive ratings is actually for its price momentum. As I said, despite reporting a negative earnings surprise, the price has been growing a few days after that report came out, and it has been soaring ever since. So it has a good rating in terms of its price momentum. Its lowest rating and its negative ratings are in terms of its earning and in terms of its risk. Lastly, Cloudera hasn't been rated in terms of its relative valuation because the company doesn't have profits. Basically, it's not a profit-making company at the moment, so it doesn't have any ratings in terms of the relative valuation, but its highest rating comes in terms of its fundamentals. It has a very strong fundamentals and also has a very high chance to grow in terms of its revenue, and that is something that we will be looking at later. So here is a summary of all of these companies and all of these categories. The green boxes represent areas where the company has had a positive rating. The blue box represents a neutral rating, and the red box represents a negative rating. So as we can see, when you look at the fundamentals, Cloudera is the only one which has a positive rating. All of the other 3 companies have a neutral rating. And in terms of the insider trading, Fluent is the only one with a positive rating. Cloudera and CRM has a neutral rating, and Workday has a negative rating. So choosing which company to invest in would really be dependent on what are your preferences as an investor. Are you a risk-taking investor? Are you having an eye on the fundamentals of the company, the earnings potential, or perhaps the price momentum, or more of a technical analysis type of thing would be a factor for you to decide which company to invest in. In summary, as we can see, if you look at the Zacks long-term growth estimate, or even Thomson Reuters long-term growth estimates, we could argue that, well, Fluent is a potentially good company to invest in. But in terms of the year-over-year earning growth estimate, Cloudera might be the winner with 133% growth estimates in terms of its earning over the years to come. So in terms of the estimated annual revenue, we can see that Salesforce is estimated to have 16 billion revenue by 2020 and $19.2 billion in revenue in 2021. So that means the company's forecasted growth revenue is going to be around 20% next year and around 44% in 2021. If you compare that with Workday, you will see that, basically its revenue growth, its forecasted revenue growth is slightly higher, 25.9% in 2020 and around 55% in 2021. Fluent, on the other hand, has an estimated annual revenue of 288 million in 2020 and 333 million in 2021. Its forecasted growth is 15% for next year and 33% in the year after. And again, one of my favorites among the four would be Cloudera, because if you look at the company's estimated annual revenue growth, it's going to be around 845 million next year, which would mean it's going to grow its revenue by 76% for next year. And in 2021, the estimated annual revenue is going to reach $1 billion. That means 115% growth, which is massive. And by 2020, the company basically joins the other companies which are capable of generating over $1 billion revenue, which is massive for a company of that size.